Good morning, everyone, and welcome back to Nadex Morning Analysis, where we look at some potential hotspots in the markets for the day. It is July 22nd, Thursday, July 22nd. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I jump into hotspots or potential hotspots in the markets today, I do need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, yesterday, Brian and I had kind of teed up that there was going to be some volatility before we did today's session. Hopefully, everyone was paying attention and was looking at what was going on in the markets, because we've got a couple of economic reports that came out this morning and did give some volatility. We want to go through those and sort of tee them up. And part of this is also understanding when we are kind of pointing you, there are opportunities in the markets around news events. Hopefully you'll be tracking those and you'll hopefully potentially be able to take advantage of them. First up was the ECB, the European Central Bank. They came out with their policy decision, and then they had their press conference. Again, very dovish, was to be expected. We're going to take a look at the euro yen. We had said there was going to be some opportunity in there. It did move. And there's been some whipsawing. If you look at the euro US dollar, you'll see that it whipsawed all over the place. In fact, we're going to do the euro yen, but I just want to kind of give you a quick peek. If we take a look at what the euro USD was doing in the last, here's a 15-minute chart, and I'm going to zoom in. You can see that you could see all the way up here, all the way down here. It went all over the place. But we're definitely there was some opportunity. We'll take a look at the euro yen. U.S. jobless claims numbers came out this morning. There are more jobless claims. We saw gold make an immediate reaction. So we're going to jump into a gold chart. And then we got to talk about energies. Inflation, we are seeing it in the energy markets. We're going to talk a bit about oil, and then there's a natural gas inventory report today. And you saw what oil did yesterday. I don't know what nat gas is going to do today, but I think it's really important that we talk about it. So, Brian, with that, let's start off with the ECB euro stuff. Then we'll do gold, and then we'll do energies.
Yeah, it's been pretty much overnight. It's been a European-based kind of headline. Just in regards to what it's doing, you're seeing the euro dollar down a bit. You're seeing the pound up big again on both the dollar front as well as the yen front, and even the euro pound is down about 64. So again, the comments from Broadbent, which were decent, they weren't bad. Talking about inflation, a lot of the same things that we're hearing. Inflation's likely to be higher. He sees good cases. It's temporary. So they're on the temporary thing as well, not necessarily surprised by it. Talking about how it's coming directly from oil, something that is likely to fall away through the early part of 2022. So maybe oil prices come down next year. But again, as demand increases, I don't know that oil prices are necessarily coming down. I believe OPEC will have their way with that one. And that's it. Everything else is pretty much like, yeah, we're going to stay. It's go. We've had our strongest growth since the mid 1950s after World War II. So, a lot of positive things, and that's why we're seeing that continued growth really coming back from the last couple of days. Now, the monetary policy meeting notes from the ECB were pretty much what was expected. They're talking about they have their 2% inflation target. It's going to run higher than that. They're talking about the PEP spending is going to run significantly faster than it did in the start of the year. Like they're picking it up a little bit. This colorful picture here is basically the comparison statement from what it was last time till this time to kind of look at what did you say last time versus now. And again, this is the type of analysis people do on these statements. I don't get into it this much, but this is what people do with it. But basically, they're talking about how they're holding interest rates firm. They're going to keep it. Like I said, a lot of it was not necessarily a big surprise, but everybody out there was like, "Yep, that's extremely dovish." So it's getting the weakness that we saw. So here's the euro yen, and if you remember, we talked yesterday. I gave you guys kind of that little insider thing that nobody else talks about, which means I'll see it on YouTube next week. using things like the dollar and the yen.
Yeah.
I typically do it when we're looking to trade against the dollar, and I'll use the euro dollar, pound dollar. We talked about it yesterday. We've seen a lot of yen strength coming back into the market, and we expected a weak statement. So it would be a better opportunity to trade this in the euro yen than versus the euro dollar, particularly with dollar news right afterwards. And as you see, we're right here. We talked about the 130.18. That was kind of a prior level peak. It was at the extreme of our intraday zone, and we hit it at about 3 o'clock yesterday, and pulled back down to this 18. I'm sorry, the 129.82, and then European session open. Kind of helped us bring it right back up again. And then as soon as that news came out, because remember, this news was at 7:45, not at the European Open, it not only hit that zone again, it collapsed back down again. So it's an interesting spot right now. I like it. This was a level that we had talked about in the past. And again, we had those buyers kind of stabilizing, this position to kind of drive through it. But right now, with kind of the weak attitude of the euro, and again, the way that we've seen the yen kind of power back over the last couple of days, not necessarily surprised at these two. And if we get basing at this level, I wouldn't necessarily be surprised if this one comes back down into kind of this 129.22-ish range, as far as where our target could potentially be, where we've had those buyers step in. There will probably be a little bit of a hiccup here, and it may actually look like something along these lines where we find these buyers here and then pull back again to it. But it's just the standard Harry Potter trade, like we mentioned all the time on this channel. It is really just kind of pulling it back down again. But the 130.89, the 130.18 was the extreme range. We talked about it yesterday. There's two different entries in there.
Yep.
Both of them were good for a 3-to-1, running 34. So in the overnight, there's about 68 pips, almost 70 pips, actually more than that if you would have still been holding it. So two different trading opportunities that you'd be able to grab. One early morning, or actually one late yesterday, and then one this morning, both U.S. tradable positions there. And again, the way you would have traded these is most likely with, probably the dailies, the 2 hours. You could have traded this in a 2 hour, but for the most part, being at 5 o'clock, 3, 4 o'clock in the afternoon, you're not really trading 2 hour, binaries at that point. So again, a little bit longer duration than we normally talk about, although this 7:45, you could have absolutely traded a 2 hour with it. It went to full, 4 pip strike with, the full, moved up to the downside.
Yeah. Well, I think that's a pretty good look at what happened following that ECB decision, and I love how you gave people the choice: the yen or the USD against the euro. The euro USD again all over the place, whipsawing, but the trade was actually pretty clean with the yen. Clearly.
Yeah.
So let's jump over then, and let's keep moving along and take a look at U.S. jobless claims, and let's take a peek at what went down with gold.
Yeah. So U.S. jobless claims came in. Again, another red number. We talked yesterday about how these have been mostly red, mostly disappointing. That last time it was a little bit higher again. The day seemed like they're holding firm with the 350 no matter what. They're always going there. Now, we had seen like kind of a reducing kind of trend here, the 412, the 411, the 364, but that got revised up to 371. It wasn't actually that low. So it was would have still been a green number because they were still at that 380, but then again, 373. 360, and then all of a sudden, bam, back up into the fours again. Now, Biden made some interesting comments yesterday. Again, I think he has blinders on also, talking about how, no, the unemployment claim is high because people are changing jobs. Kind of not where people file for unemployment is when they're changing jobs. They typically, that has more to do with layoffs. But again, he even mentioned that, one of the sectors that is hurting, and we may see continued job loss is in restaurants, and they're going to have a hard time. Again, there's a lot of people employed in that sector, so it's not necessarily the most promising statements like we'd like to see, but this has obviously had an effect on the overall markets, particularly in gold. Gold, yesterday, we were sitting, let's see, this one was kind of messy. But right here is where we were yesterday. We were touching that 1795 level. I remember on our kind of parting shot, we said, hey, listen, we just came out of there. You can see by 9:30 by the open, we'd hit that level. And then it's been all day pulling right back down again. And about that 4 or 5 o'clock window, we were sitting in that level ready to go. So, I always get asked, when do you place these trades? How do I, again, the Europeans, this is the European Open right here. So it's always a great, it's kind of a great, I don't want to say telltale because that's kind of, like I said, it's not a crystal ball, but when you have something big like that, when you see the European market drive prices of gold back into a level, And then you have something like unemployment that, unemployment as well as the ECB data and everything like that. I mean, all that data factored into this move, right? We knew 1795 was a buying area. We knew we had buyers in there. It pushed it and went a little bit out. But again, with Nadex, this doesn't matter. Having 1 or 2 pips, as a futures trader, this would have stopped you out because it went right past the level. Again, depending if you put a buffer, but with Nadex, we knew we were in an area. So again, taking something that's a little bit, farther out, just from that news, really from that 8 o'clock window forward. I mean, you can talk about this is a $13 move. Just the candle, just the current candle that we're in is a $9.50 move. Do you have those binary contracts? Todd?
Actually, I'm going to swing it over right now. Here we are right before the number. So 1, 2, 3, 4, 5 strikes. And this is a fairly significant move for gold as of late. Definitely a pop, and we're playing around with that 1800 level, which we always know is a psychological level. Right, because it's the double zeros. But yeah, that's this is a pretty big jump after with gold actually. Woo,
yeah, I mean,
back it out.
And the strike and guys, the strike differential is $3, and that's in the 8 to 10. So I mean, you've captured $13. So you've moved plenty of strikes across in that one in a very, very short period of time. And that's again, using something that's a little bit out of the money helps you take lower risk in the trade. But what it does is, if you have a standard risk percentage that you're risking in your account per trade, you position size yourself correctly. So if you're going at the money, okay, you can take less contracts. If you, and risk X number of dollars. That same X on an out of the money contract allows you to take more contracts, but you still have the same exact risk percentage. But when it goes higher, you're still risking the same amount as you would have done it with the at the money, but now you have 2 and 3 and 4 times as many contracts, and your profit is 2 or 3 or 4 times more, exponentially higher. So again, that's why in a lot of cases for these news releases, when again, we knew the US trader stepping on, we knew we had a bunch of data all within a 15-minute window, take advantage of something small like that. And again, this is why I always talk about how news trading is great, because it's a catalyst for movement. It doesn't change the trajectory. It's a catalyst for faster movement.
That is the opportunity. I mean, that's ultimately what you're looking for. And with binary options, that really does. It's a great. That's the opportunity that you're looking for. So trading around those news events really does. And again, then you don't have to sit in front of the computer all day long.
Right.
When.
I mean, gold's showing that it's down 0.02% right now. So I mean, like, if you're holding positions, what are you doing with that? You're down now it's down 0.03. Hold on, Jim. My daughter is
I love what
she's
you
with me
us.
again.
Right, yeah, but there was trading opportunity. I mean, European session, they pushed gold lower. The U.S. jobless claims came out right then. It completely retraced all of that. And some great.
And it's something that we're seeing. I mean, yesterday, if you look at it yesterday as well, I mean, here is let's see, where are we at? Here's the European Open yesterday. And what did it do? It drove it down, and here's that 8:30 window, and then we drove it back up again. And then European section, we drove it down, right, from the 3 o'clock. Actually, I guess yesterday, hold on. Yesterday was, here we were. Same thing. They drove it down again, spent all this time here, and then shot it back up again. So this is a trend that we've been seeing. Same thing we had the day before. Again, we drove it up. The European session opened here. We drove it up. U.S. traders stepped in and drove it down again. So it's been one of those repeating trends where the Europeans drive it one direction, placing it for the U.S. trader, and then the U.S. trader reverses it and sends it in the opposite direction. So when you can time that with the zone like we did here or here or here, again, that's what trading is.
All right. We can't finish today without at least talking a bit about what happened with oil yesterday, and then let's just kind of tee up nat gas, because there is the inventory report. In fact, I'm going to grab the link and I'm going to drop it in the chat. But if we take a look at what crude oil did yesterday.
Yeah, here's crude. I mean, here's the European session. Here is U.S. session. So, and again, it had movement from the end of the day. So in reality, from when the market closed, it moved $4.14 from U.S. market close yesterday until, oil closed today or yesterday. That's huge. And if you guys look at the release was that we had a surplus of 2.1 million barrels. It just goes to show you that it doesn't necessarily matter what this number is. And I always talk about it. You don't have to know what it is. Just know that it is a moving event. This is telling us we have extra oil. And what did oil do? straight up to the top. Again, it's all about taking people's money. If a retail trader sees that positive number, it says, "Oh, we're shorting." No. You got to be able to watch it and trade it on a technical basis. So again, a huge explosion through the top. Today, we're basically at nothing. This is where we opened, and here I'll make it big so you can see it. This is where we opened. This is where we are right now. So I mean, it's literally like they rallied it up and then brought it back again, talking about that kind of weaker. And now they did, again, some of the statements did mention that oil prices are going to go down. This is kind of one of those things where if a business is selling something for $100, they're suddenly not going to say, you know what, we're going to sell it for 60 because we're nice. No, once people get used to paying something that they're going to pay, I would expect oil to stay up in this range. Maybe a little bit of a pullback, but like I said, as countries start reopening and things like that, vaccines are spread out to other nations as well. You're going to see it. I mean, Canada's lifted their travel restrictions. The United States extended theirs a little bit for land borders, meaning driving back and forth. But those are only for a couple more weeks. Canada's, I think, is a week, and the United States is like the next, I think, 25 days or something, 30 days. I think it's the 21st of August. Things are opening. People are going to start driving again. School buses, they're going to start running as well soon. So, I see an increase in demand, and then we'll see. I mean, remember, we can no longer call it global warming, right? Because it's supposedly all weather, which means as we get to the winter months, it should be extreme cold, right? Because it's climate change. So, which will also help jack the price up for both oil and natural gas. Now, with that being said,
let's finish with nat gas because I know we're running a little long here, but I think it's important.
So don't forget, natural gas, guys, is also today. Here, this dollar, bam. Oh, it's not going to show it to me. Oh, there it is.
By the way, that's at 10:30 Eastern.
Yep.
10:30 Eastern. Be watching nat gas. Mm-hmm. And the numbers are up there, so you can actually take a look. I did drop the link in on Daily FX, so you can actually track.
And again, you guys don't, just know that this one is accurate as well. Most of the time, it is a miss, and it could be right. It could be dead on today. You never know, but that's why we look for small risk and controlling our position. So right now, I would say that it's pretty much at kind of a high. You guys can see if I scroll back, we're pretty much at high prices for natural gas. We have a ton of natural gas in the United States, so it's not like there's any shortage. We're one of the main exporters of natural gas, us and Russia. Way to play this is the same way we play it. We play natural oil. Get down there, look at it on the smaller time frame, see if we've pushed into a level. Right now, it's kind of boxed in, I'd say, between those highs and kind of this area right now. So we're a little bit on the higher side. Look to see where it is. Look to see where price moves about 15 minutes before the actual news release. Because again, remember that data is disseminated a little bit early sometimes to certain people. And again, look to see where we go with it. Right now, I would say I'm probably lined up more for a short, but energy pricing, it's getting sucked along with the oil energy pricing. But after yesterday, again, another big day up for natural gas. You can see that it's just been rallying up, and it's finally broken that channel. There may be a shorting opportunity in natural gas at 10:30.
All right. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian? You can also catch him at support@keeptradingsimple.com. And I don't want to keep us any longer than we need, but a quick review. The ECB came out with their policy statement, saw some volatility both in the euro yen as well as in the euro USD. U.S. jobless claims came out. Gold popped. Saw a great trading opportunity there. And then we've got the oil, which ran up yesterday. Definitely seen some inflation in the energy sector. And we do have the natural gas inventory report today, 10:30 Eastern. Keep an eye on that. Brian and I will catch you again tomorrow morning. Good luck in the markets, everyone. Thanks.